Good afternoon, David and friends. Anthony Fontana here. Dave, you asked me to do a quick video with regard to onboarding what we call independent contractors and how that actually works in the real world. So this is a quick video. I'm going to share this on my little YouTube channel. I'll get the link to you. It's not something that I normally do this, but it's really very basic. So when you become an independent contractor for a company, in this case, DPS Integration, it's extremely important to understand that you will not have taxes taken out of whatever agreed to salary or pay you get from the company. Companies bring you on as an independent contractor because they don't necessarily have the ability or desire to really control every aspect of your work. Like, I'm an independent contractor, I'm an accountant, I run my own company. I'm also the CEO and president of it, but I'm a corporate entity. At the same time, I'm also a tax accountant. I'm a PTIN with IRS and EFIN with IRS, registered with the state. I do business in probably 40 states right now, with not just businesses, but with individuals that require and want my services. So I get 1099s from a company called Square. We have 3 separate Square payment accounts that we have set up, and I get 1099s from them. 2 of those 1099s are in my personal name as an independent contractor. They're called 1099 NEC, and then the other one is through my corporate account, a completely separate operation from what I'm doing here with you guys, and that's also a 1099 NEC, but it's to the corporation, Anthony Fontana Inc. So my 1099s for me fall onto a Schedule C, and then I handle my taxes are quite complex, as you might imagine. Everything gets tied to various S corps and things like that to give me a tax advantage that are legit and accurate for myself, and I've been doing that for decades basically. So in your case, though, you're going to get a 1099 NEC at the end of the year. Well, really, basically, sometime around mid-January. What will happen is, David and I, or myself as their accountant, will track money being paid to you in real time. So if you're on a salary, however they run it, if they're using either ADP or we're using QuickBooks Payroll, however David decides to do it with his partners, it'll be a simple thing. They'll pay you. That'll go direct deposit into your checking account or a check, or however you guys work that out, based on a certain amount of time or energy that you put into the work that they're giving you. And I understand that there might be some contract in play for that. That's outside what I'm doing right this moment for this. So when you get that 1099 NEC, this is a very important point. There is no tax withholding on that. There's no W-2. You're not going to have any of that like what a normal job would be if you worked, somewhere at a construction company or a restaurant, a computer services company, or a bank like Chase or Citi, and you're an employee working at a desk. You're going to get a W-2. It's going to have federal, state, local taxes, if any, if you're in New York City, local, and you're going to have maybe deductions for insurance, things of that nature. So that W-2 is what you then give to an accountant. A 1099 is also something you give to an accountant, but there's a little extra work involved. And here's the amazing advantage of it. You get to allocate the things that you spend, the money you spend helping run your business, they're tax deductible. In other words, in the course of doing your work, you're going to have an office. Maybe you're working from home. I don't know. Let's say you do have an office in your home. It could be a desk with a computer on there. Well, that's where you're working. So that space becomes an office for your company, which is you. You're an independent contractor. So, your name is, Joe Bloom. Well, Joe Bloom LLC or Joe Bloom Independent Contractor is going to have a Schedule C created. The Schedule C is basically an independent contractor schedule attached to a tax return. It allows us to figure out what's the gross revenue, which in your case would be whatever David's paying you, and then what are the expenses against that income. Now, normally you'd have your standard withholding taxes. In this case, there are none. It's all going to be borne by you. What I usually tell people to do is take at least 10% of what you're being paid and put it somewhere where it's not touched, a bank account somewhere. Open up a savings account next to your checking account so you can automatically transfer 10% in there. That's a bare minimum at that point. But on the tax side, the accounting tax side, on that Schedule C, you're going to have deductions. In fact, if you send me an email, I will send you a 3-page tax deduction sheet that I hand out to a lot of business owners that work with me. And it's very, 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 very clear what's on that sheet is eye-opening, because most people don't even realize what's deductible. First, if you're paying rent and you're in a 1,000-square-foot home or apartment and you're using an office, we'll say it's 100 or 200 square feet, then a percentage of your electric, gas, apartment phone, and rent are deductible against the Schedule C. Well, you can't get that on a W-2. It's just not possible. So your W-2 income is here, but your self-employment income, which is the same dollar amount, will come down in terms of what's taxable to you. The next thing that you can deduct on a tax return if you're an independent contractor is cell phone, because you're going to be using your cell phone probably quite a bit. So a portion of that will be deductible. Those are numbers that you give to your accountant. You just keep track of your bills. You can use a bank statement if you want, if you're small enough to do that, or you can use a little worksheet or a ledger or an Excel spreadsheet. When your bills come in, you just type in the totals on there, and you can hand that to your accountant at the end of the year, and he can help you figure out what a part of those expenses can be deducted. Meals. You're an independent contractor, you're working for yourself, and if you travel at all on business, if you go anywhere outside that office that you have, anything that you do outside that home is a deduction. Your car expense, your travel expense, all deductible by you. And again, I said cell phone, but there's more to it. There's so many things that you can allocate to yourself that basically in a lot of cases that sometimes half of the income that's coming in on an independent contractor Schedule C is deducted from it, which lowers your bill. It lowers your self-employment taxes. Now, self-employment taxes are an interesting thing. I'm going to close with this. I'm at 6 minutes and 57 seconds here. So here's how that works. Well, I'm going to use the best example that I can. I'm going to use a simple number of 100,000. So an independent contractor has a $100,000 net profit. Gross income, whatever it is, net profit, all the expenses, 100,000. There's a number that scares people that's part of being self-employed. It's called Social Security and Medicare. Social Security and Medicare are approximately 15.3% of the net profit on a company. In this case, it's about $15,000. Now, if you were getting a paycheck of $100,000, half of that number would be paid by your company that you work for, and the other half would be deducted from your paycheck. So you kind of don't even see it. It's called net pay, take-home pay, right? That's on a paycheck. Independent contractors don't have that net paycheck. They have to set it up, which is why I tell people to take at least 10% of what's being paid to you by a contracting company, in this case DPS, and put it in the bank. It's probably even better to take 15 or 20% of that number. So if you're earning $1,000 a week, take $200 a week and put in a checking account, or at least $100 minimum. Because at the end of the day, at the end of the year, it can be a little intimidating when you find out from your accountant that you've had no taxes held anywhere by anybody, and now you owe IRS income tax, and you also owe Social Security and Medicare on top of that income tax. Those are two separate taxes from normal W-2 income, normal wages, if you want to say it that way. But the deductions are there. You have standard deductions that everyone gets. If you have children, there are tax credits, child tax credits that accrue. I don't know your situation. Unless you set up a consult with me directly down the road, I won't really know much about you. If you've ever filed a tax return, if you filed one for 2024, if you wanted me to review that and give you an idea of how things would work for you going forward, all you need to do is email that to me. My email is thetaxguy5858@gmail.com. Very easy. My cell phone number is 917-331-9686. I hope this helps. I'm going to share this with David, and he can decide to use it. Maybe we have to shrink it down, fine-tune it a little bit. But it's really very basic. You're paying your own taxes, but you also have your own expenses that you would normally have anyway. You have a cell, you have rent, you have utilities, you have car expense, you have all the things that are normal in life that you cannot deduct as a W-2 employee, but you can in fact deduct a portion of as an independent contractor. So good luck. I hope it works for you. David is one of my favorite clients, and I'm looking forward to seeing how this new company grows and thrives. And hopefully you'll earn profit, you'll make money, and you'll have a great living and a great lifestyle because of it. God bless. Have a great day. Take care, guys. Bye-bye.